What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into harmonic technical analysis as well as getting ready for the upcoming week in the markets. And today we're going to be also breaking down what you need to know as we approach some key economic data releases in CPI, PPI, and initial jobless claims. First up this week, we have CPI, better known as the Consumer Price Index. This is a measure of inflation. It tracks how prices are changing for everyday goods and services. It gives us a pulse on the cost of living and how inflation might impact market movements. We also have this week PPI. This is the Producer Price Index. It focuses on the prices producers receive for their goods. It's another key inflation indicator, but from the supplier side, which can help us understand future consumer price trends. And finally, this week we have initial jobless claims. This report gives us insights into the labor market, showing how many people filed for unemployment benefits for the first time. So this is a crucial key indicator for understanding economic health and market sentiment. I also wanted to talk about some key factors to watch out for this month, and one of those key factors is seasonality. So for those of you who track seasonality, know from historical data that the month of September tends to be the worst performing month of the year. So there just seems to be a lot going on for this month of September. We also have the data that came out last week with the job numbers that was also a little bit concerning because the demand for labor is weakening a bit, and obviously that could affect economic growth. And we also have the elections around the corner, as well as the most anticipated thing for this month, in my opinion, is the September 18th meeting where the Fed is going to see if they're going to cut rates or they're going to keep it flat. So while the market is hovering around all-time highs, it doesn't quite feel like a bull market, at least to me per se. A big reason for that is because the VIX remains elevated alongside some other contrarian indicators that are also rising up, like the total put-to-call ratio. So for those of you who like historical data and track the VIX, know that when the VIX enters around the 23 to 25 range, that is considered a bear market cycle, and last week we did go as high as 22. And in my opinion, part of the reason why the VIX is elevated is because Wall Street is also unsure whether the Fed is going to cut rates by 20 or 50 basis points at the upcoming September meeting. So normally there's a strong consensus with 90% plus certainty using the Fed monitoring tool. Sometimes you can see those levels, and right now it literally is a flip of a coin whether the Fed is going to cut by 20 or 50 basis points, and they could even ultimately come out and do nothing. So this uncertainty, in my opinion, is a big factor driving the elevated VIX. For me personally, I'm going to be heavy on cash until the market picks a direction. One of my theories is that I do think seasonality does play a part here in August, September. You'll have data that is bearish, but ultimately my theory is towards the end of the year, when seasonality picks back up, you're going to see potential boost back up in the labor market, as seasonality with the holidays coming in tends to hire more workers during this time period. But in the event that that doesn't happen, then we can have a bearish end of the year for the markets. But like I said, I'm going to take it one step at a time, waiting for the data to show me whether we're going to continue pushing to the upside, or we're going to come down and retrace a little bit. So until then, I'm just going to rely heavy on cash and not going to be going out to take swings further out, just because I don't like the fact that the market is uncertain to whether we're going to continue pushing for higher highs or are we actually going to come for a retracement. There's a lot of things besides just the total put-to-call ratio and the VIX that are also elevated. You have a concern also with the uninversion of the 2 and 10-year bond. So there's a lot going on, and usually when there's uncertainty, it's just best to stay on cash until the market picks a direction, and then you can go alongside of it. So don't forget to like this video if you find it helpful, comment your thoughts down below, and subscribe if you're not already so you don't miss any future updates. Before we get into those charts, I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusion. Having said that, let's jump right into those charts. So jumping over to the SPY here, we do have the bullish black swan that's in play here. We did go up for the type 1 reaction, and now looking like we are coming back down for a retest of PT1 at 531.24 as volume increases to the downside. I bring on my drawings here and my other indicators. The next level to the downside, if SPY continues to push down here, because volume did increase from Thursday to Friday, is, like I've said, that 538.33. Below that, you do have a gap to fill right in the 535 range, and then you have PT1 at 531.24. If you take a favorite retracement from the most recent swing low to swing high, you can see that you did fall below the 382, and the next level would be the 50% retracement of that wave at 537.92. The 618 would be at 531.72, which gives confidence for a retest of that PT1 at 531.24. In the event that you continue falling down, then you break the momentum back bearish because you fall below 60% of that wave, 61% of that wave, and then you can see targets to the downside here at 524 all the way down to CD at 510, where slightly above the 200 EMA is at. Right now, what's interesting on the harmonic indicator is that the HSI is completely oversold, so you could get a technical bounce here around that 538 range, where you would look for a reversal candle back up and an HSI arrow triggering, so you can look for momentum back up to test 544, 547. In my opinion, that 547 is not going to be a level of resistance. You also have a 921 crossover to the downside about to approach, could happen next week into data. So we have CPI to wait for next week, so it's going to be very important to see whether SPY is going to fail these levels and continue making lower lows. If we go over to the weekly here real quick, you can see that the HSI did get rejected off the midline and is coming back down to test the 21 EMA at 537. So as you could tell that the 21 EMA has held support so far. It did come below back in October, and you did lose it back in early August there, but ultimately found support above it and reclaimed it to make a higher high. So right now, those are the levels that I'd be looking at for the SPY. We do have targets to the upside, so we need to get above 547, and then ultimately, if you get above 547, you can look for a push back up to all-time highs, and then maybe finish that PT3 Black Swan at 599 down the line. But right now, it looks to me to be more bearish than it is bullish right now, because volume's starting to increase to the downside, but you can have a technical bounce, so definitely keep a close eye on SPY. Jumping over to the triple Qs here, so the triple Qs, like SPY, has this bullish black swan on the daily. As you could tell, it did a type 1 reaction above PT2 and is looking right now like it wants to do a retracement for a type 2 return to potentially OPR. So what are the levels to watch out for here for the triple Qs? As it did lose PT1 454.04, the next level I would be looking at would be the 200 EMA SMA, just roughly around 411 to 440 to 441, somewhere around those levels. You did lose a line for me there at 450.72, which was a little bit concerning as volume is increasing. The HSI also has a little bit more room to the downside before it reaches the oversold conditions, and that could be just slightly where the 200 EMA is, or slightly below. If we take a fair retracement from the most recent swing high to swing low, you can see that the Qs is actually approaching the 618 of that wave, which is at 447.17. So that is a level I would be watching out for. If you do lose 447.17 from this impulse wave, that means you would lose the momentum and come back, bring the momentum back bearish, because you did lose 61% of that wave. So a very close level to watch out for. If you lose 447, then you invalidate this push up here, the rally that we had, and you look like you can come back for an inverse V all the way, even to double bottom there at around CD at 423.45. Below that, then you have 408, and then to complete the type 2 return to OPR would be at 401.67. If you find support here above the 618, the next level you need to hold a support above is 450.72, reclaim PT1 at 454.02, and then ultimately climb back above the 50 SMA at 472.93, and you'll be looking for targets to the upside, where you do have a gap to fill at 491.504, and then PT3 at 553 down the line. On the weekly, as you can tell, we did lose a 21 EMA. For the Qs, you have lost a 21 EMA a couple times before here. You did go all the way to retest the 50, so if the Qs continues pushing down, the 50 SMA would be around $430, which would give confidence to around just between the 200 EMA to CD of the bullish black swan on the daily. So definitely keep a close eye on the triple Qs. Jumping over to the Dow Jones here, so the Dow Jones has this bearish crab on the daily. So what can we expect here? You did go up to X8 there at 413.72, and you're looking like you're coming back down to T1 at 401.08. The HSI is completely oversold. You are potentially reaching the extreme oversold conditions, so if this continues going to the downside here, the next level I'd be looking at would be to fill the gap there right where T1 is at 401.08. Fill the gap slightly below the 50 SMA. See if you can get a reversal candle back up, and then you could be looking towards 412.35, XA at 413.72, and the all-time highs around 416.55. Above, you have targets to hop at 422. One of the important levels to watch out for here for the Dow Jones is if you take the swing low to most recent swing high there, you can see that you're slightly at the 382, which is around 404.47. Below that, you have the 50% retracement, which gives confidence to target one there to fill that gap around 401.08. Right now, in my opinion, the Dow, compared to the other indices, doesn't look half bad. It looks stronger, in my opinion. So watch out for those levels below the T1, and you start losing most of the momentum, and you can start looking for the 620. That's your last level of support. If we go over to the weekly here, the weekly, you can see that it's just closed slightly above the 90 EMA. So the next levels to watch out for would be that HSI midline, which could be right around the 13 EMA where the gap is at. You did lose the ABCD there pattern at 407.02. So this is calling for a retracement to type 1 reaction at 350.92 down the line. That's obviously on the weekly harmonic, so that could take a while for that to play out. Volume did decrease on the weekly for the Dow Jones. So the levels to the downside to watch out for the Dow Jones, like I said, is that gap fill basically around T1. Below that, then you have 393, and then you have a retest of the 200 EMA there around 485, where you could double bottom. So if my opinion, if I see some support level here around 450 and you get a strong reversal, you could be looking just to create a higher low, and then you could be looking for a higher high down the line. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here, so the Russell 2000 has also a black swan, bullish black swan like the Qs and the SPY. You can see that it finished type 1 reaction at PT2 above PT2, and are now losing PT1, where it did close on Friday at 207.90. So the next level I'd be looking at would be the 200 EMA retest there around 202.43. The HSI is completely oversold as well, but it still could reach the oversold extreme conditions, which could take it below the double bottom at CD at 196.7. Below that, then you have OPR at 188.02. A huge level of support now would be the $202 range. You can see maybe a double bottom there, and then continue back up to 208.90, 216.43, and ultimately this level up here around 227, where it is around 224 to 225 right here, where you have a bit of resistance and are not able to break above that. So if we go over to the weekly, you can tell that the weekly has a bearish white swan, where you are coming to test PT2 potentially at 205.58. You did lose the HSI midline on the weekly, so if you are coming back down, the next level of support, if you lose PT2 at 205.58, would be 201.99, and then the 200 SMA there, and where the 50 SMA is at as well, around 197 to 198 and change. Right now, what's interesting here is you do have a potential golden cross about to approach here for IWM, so look for that. It could also be a false breakout. We know that crossover strategies could also be delayed. So in the event, let's assume this does play out, you could look for just a retracement back down, and then look for targets to the upside. Ultimately, what I want to see for a golden cross to play out is for you to reclaim at least the 90 EMA and all the EMAs up here that I have, so it can give strength to that potential strategy to play out. So you definitely want to get back above the 90 EMA around 212, call it PT1 at 214.39, and you'd be looking at 228.63, and then a new 52-week high at OPR at 238.72. Right now, in my opinion, the Dow Jones and IWM don't look half as bad as the other indices. We know that seasonality is the case normally with the tech stocks, the tech sector taking a big hit. We saw NVDA and the semiconductor space also take a big hit. So right now, a level to watch out for IWM is the 618 at 206.52. You did lose 50% of the retracement of this wave. So that's the next level I'd be looking for IWM to hold. If it doesn't hold, then you shift the momentum back bearish back down, maybe to double bottom. If you find support of the 618, then you'd be looking, like I said, to retrace back some levels, 209, 212, and then ultimately 216 down the line. So definitely keep a close eye on IWM. Jumping over to Apple here. So Apple on the 1 day does not have a harmonic pattern forming here. So one thing I am looking at is for a potential harmonic pattern to form. As you can tell, this looks like an M formation here. Some of you guys may know it as a double top. Ultimately, an M formation for harmonics is a bullish reversal, bullish harmonic pattern back up, but you would need to create a lower leg down here. Point D would need to come back down for a reversal back up for that bullish harmonic to form. One thing I'm looking at here for Apple, as I bring out my resistance lines here, The next level I'd be looking at is that 221.59, which you did lose finally on Friday. The next level I would be looking at would be the 50 EMA. They're at 219 and change. Below that, then it can get very nasty for Apple to the downside, all the way back down to 198, $200 range. The HSI still not in the oversold conditions yet, so if losing that level, you could have a bit of a sell-off here for Apple. If we take the fib retracement from the most recent swing low to swing high, you can see that it's just slightly above the 382, so that extreme case scenario there. If you hold support above 382, you'd be looking to retrace back up to 221.59 and ultimately up here around 230, 229, and then maybe reach 233 and then all-time highs. I do have a target up there at 242.22. Right now on the weekly, you can see that this is a level of resistance. You did slightly close below 90 EMA, which you got rejected at the HSI midline as well. You do have a dragon pattern here on the daily, on the weekly. Obviously this went above it, but like I said, you can start looking more clearly like an information. To the downside, you would have targets below the 13 EMA there at 217, the 21 EMA at 210, you have OPR at 207, and then the 50 SMA at 194.52. As you could tell previously, Apple does come back to test the 50, it would ultimately find support, hovers around below it, and then it goes to make higher highs. So obviously a retracement to 192 would definitely put the HSI to the oversold conditions, but the volume is on decreasing volume, so we can't call those levels out just yet, but that's what I would be watching to the downside. So definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft on the daily has this ABCD pattern. As you could tell, it's finally doing its full type 1 reaction again. So when you created the pattern here, you went to hop, you did type 1 reaction, you try to go for a type 2 return to hop, but failed, and now it looks like you're coming back to T2 here at 399.45. So volume is increasing on Microsoft here. The HSI still got plenty of room to the downside for it to reach the oversold extreme conditions, and that could be around 386.73, where there is a double bottom there for Microsoft. If we go over to the weekly, you are holding support just slightly above the 50 EMA and SMA. As you could tell before, it has tested the 50 SMA here, found support, climbed back up, but ultimately right now we're going to see if this is going to actually make a lower low. So very key level here for Microsoft. Microsoft starting to lose some important levels here, specifically being the 200 EMA. As we know, when you lose the 200 EMA, it tends to be bearish here. So I'd be looking at to see if you do come back down to 386.73, you would look for a bullish reversal candle here to trigger an HSI arrow to indicate that it's coming back up, or at least ultimately hold support right here around that $400 range. In the event that it doesn't, then I do think you might come back to reach that double bottom there around 386 and lose that $400 range. Microsoft does look here a bit bearish ever since it reached its all-time highs. You did come back all the way down to 17%. Right now you're currently just around 14%, so it did kind of already a retracement, a correction. So we'll see if it finds support here, traps some bears, traps some bulls or not, because right now the MACD has also flipped red, but are obviously too early to tell. This could be a lagging indicator, so definitely keep a close eye on Microsoft. Jumping over to Amazon here. So Amazon has this bullish shark pattern on the daily, and much like Microsoft, it's starting to also look a little bit bearish here for Amazon. You are closing below the 200 SMA, and Friday you went to as high as 178 before closing the day at 171.39. So you are closing above the 200 EMA, but in the event that you lose that level, you have a big drop all the way to the terminal bar there at 151.61 on Amazon. Right now you are slightly just holding above the HSI midline, so if you do fail that, I do think you have a big drop here for Amazon. So key level to watch out for here is that 200 EMA. If you do find support here and off the midline, you want to retrace back above target 1 at 176.41 and then 181, ultimately getting above 188, so you can get bullish once again here for Amazon. If we go over to the weekly, you can see that the EMAs there are starting to get really tight here, so the next level of support here on the weekly SMA EMA would be the 50 here around 167, where it has come down below it, ultimately held support and recovered. So right now you are approaching the HSI midline. You kind of did also curl back down a bit here at the end of the week, but you could see a potential push back to 50 EMA SMA there at 167, go back to OB. If it fails, then you'd be looking for a type 1 reaction of the shark pattern at 135.60 down the line. So obviously it's on the weekly, this could take some time to play out, but yeah, very key level here for Amazon. Watch this 200 EMA. If it fails, you have it looks a bit bearish for Amazon, so definitely keep a close eye. Jumping over to Tesla here. So Tesla, you did get bullish during the week here. You did go almost to test BC there at 235.90. I think the high of the week was 235. Ultimately Friday, you had a big bearish engulfing candle there. It was off of decrease in volume, so in my opinion, what I'm looking at this, at least if you're looking at volume to price analysis, as this being an anomaly, because the spread of this candle is much wider than this off of much less volume, right? You had high volume here, you had 119 million versus 112, and the spread of this candle is much wider. So could it be a bear trap? Who knows? We have to wait to see. If you've already to invalidate that engulfing candle, you definitely want to see continuation into Monday, tomorrow, with high increased volume to suggest that this wasn't an anomaly and you're going to come down to test some levels to the downside. As I bring on my drawings here, I said that the level to watch out for here will be 223.79. If you broke that, then you could look towards 260, 258 down the line. You did break above it. Ultimately, BC is where you hit resistance, and you did enter the gap, but you could not ultimately close it. So right now, all it did is you failed 223.79, and you put yourself back in my range where I said you look to see if Tesla holds above the 200 SMA, which is around 203, and 223.79. So all it did right now is put back itself in that position. In my opinion, if you just hover around that range again, just look for it to retrace back up to 223 to get bullish again. Below the 200 SMA, you could be looking for targets to the downside at 189.30. And if we go over to the weekly here, the weekly also a little bit of a situation, because you did go to the 200 SMA and got rejected off of what this is, a shooting star off of increase in volume. So you're kind of in a dilemma here, in my opinion. Just wait out to you see if it breaks out of these bullish or a bearish resistance, support or resistance here, right? The resistance, the support being at 200 SMA. If you lose that level, then you can go bearish. If you go above 223, then you could go bullish again. Right now, I would not be, in my opinion at least, looking to enter anything here. Let the chop just be chop and wait until momentum, whatever momentum wins, and you can play alongside it. But definitely keep a close eye on Tesla. Jumping over to Google here. So Google on the daily completely lost the 200 SMA, closed at 150.92 off of increasing volume. To me, in my opinion, Google looks to be like the worst performing blue chip right now. If we take the all-time high to the most recent price range here, you can see that it retraced down to 21.5 almost there. So kind of bearish here on Google. If we also go over to the weekly here, we do have this giant ABCD pattern where you are looking like you want to come back for a type 1 reaction at target 1 at 137.77. Yes, the HSI is in the oversold extreme conditions, but it doesn't mean it cannot go back down to form a double bottom, in which case, in my opinion, you would go and complete the type 1 return to the T1 there at 137.77. You did lose the 50 SMA there as well. I don't think you haven't lost the 50 SMA since when was it? Back over here, right? So you lost the 50 SMA back in March of 2022, and this is the first time since then. So the next level here off of that EMA would be all the way up to 122. So luckily there are some targets here for support. That the white swan would be at 140, T1 at 137, and you got PT2 at 133. Then I do have a level of support that should hold around 128.71. It could be an event that you could just wick down below the 200 EMA, serve as support at 124, ultimately look to bounce off of that and reclaim 128. The RSI looks like it wants to go to these oversold conditions. You did get the 921 crossover on the weekly, so off of increasing volume. So Google does not look great in my opinion here. So levels to reclaim here off the weekly would be to hold above the 50 EMA there where CD is at 153.78, ultimately get back above OPR at 162.91. Reclaiming that level, then maybe you could look towards targets to the upside. But right now, the RSI also did reach the oversold conditions. You are below 30 here, but that does not mean you can't continue pushing further to the downside, right? There is a slight bullish divergence, but in the event that does not come to fruition here, you don't reverse here, you could be looking at previous targets here to the downside, which would give confluence to the bearish harmonics on the weekly. So Google, a bit of a situation here. A volume is completely coming into the downside. So levels of support to reclaim, you definitely want to get back above the 200 EMA at 157.94. Ultimately above that, then you could be looking towards the 21 EMA at 162, where you are having a bit of resistance there at the 21. Break above that, then you could see the 50 at 166, and then 170 at the 50 SMA. You could look towards that gap down the line, but ultimately right now I don't see those targets to the upside just yet, because the volume is starting to increase to the downside. So watch out for Google, because if you don't find support at these levels, there could be a situation where this just completely starts coming down fast. So definitely keep a close eye on Google. Jumping over to Meta here. So Meta, we have a bullish black swan and a bearish bat swan pattern. So Meta is also starting to look a little bit bearish here off of increase in volume. We do have a bit of conflicts with these two patterns, as the next level of support would be target 1 at 481.48, which is also where the black swan PT1 is at 480.91. So couple cents shorts different there. You did get high increase in volume, like I said, to the downside, which is engulfing quite a few candles here, right? You had a bit of resistance here with these doji candles here, and now you are picking up for volume. So you're looking at T1 for the next level. Then you have the 200 EMA SMA roughly where T2 is at 455.90, and then CD at 442, and then OPR at 415 down the line. If we go over to the weekly here, the weekly does have a bearish white swan on the weekly, so the HSI is approaching that midline. That midline could be around PT1 at 493.80, which gives confluence there to around that PT1 target as well. So the weekly, you do have PT2 at 463. You tend to hold support above the 21. You haven't lost it ever since you broke out of it back up in January of 2023. So the next level, like I said, PT1 off the weekly would be 493.80. Below that, you could go to PT2, and then for the first time retest of the 50 SMA at around 437. So definitely keep a close eye on Meta. Like I've said, seasonality is a thing. September tends to be the worst performing month of the year, specifically within the tech sector. So we'll see if there's any more downside, as the tech sector has been leading this sell-off. So definitely keep a close eye on Meta. Jumping over to Netflix here. So Netflix also starting to increase on volume to the downside here. It did close on Friday at 665.77, ultimately finding support above the 50 SMA. So the next level to the downside, I would be looking at the 50 SMA there, just around 459 to 460. If you take a favorite retracement from the most recent swing low to the swing high there, you can see that it's just slightly holding support around the 382. So below that, you have the 50% retracement at 649.650 and the 618 at 634.83. So those are the levels to watch out for to the downside. If you hold support here, you'd be looking to retrace above the 90 EMA at 679.680, and then ultimately try for another attempt to break above the all-time highs there, around $700 and change. The HSI coming down here looks like it does want to reach the oversold condition, so watch out for that level, like I said, at the 618 on the favorite retracement from the swing low to swing high. Off the weekly, you do have this bearish white swan. The 90 EMA is holding support here, so the next level below that would be the 13 EMA at 659. Like I said, gives confluence to the 50 SMA target on the daily, and then the 21 EMA there is at 641, where PT1 there is at 638.10. So below that, you have PT2 at 601. The 50 SMA would be around 580 and 570 for the 50 SMA and EMA. So right now, you are picking up volume again on Netflix to the downside. See if that level holds. Because if it holds, then you could be looking just for a potential bull flag here on Netflix. Otherwise, you feel that level, then you start looking a bit bearish, and the momentum to shift back bearish for Netflix. So definitely keep a close eye on Netflix. Jumping over to NVDA here. So NVDA, no current harmonic on the daily, but we are picking up some volume here to the downside that is not able to hold support above the 50 EMA. So the next level I'm looking at would be 97.04 here for NVIDIA. You're completely oversold on the HSI. but you still got room to reach the extreme zone. So that could be around where $97 range is, even ultimately all the way back down to where the 200 EMA and SMA is at. So the 200 EMA is between 93.79 and the 200 SMA at 89.47. If we go over to the weekly here, you can see that it lost a 21 EMA off of a decrease in volume, but ultimately HSI is starting to curl back down. So the next level I'd be looking at would be 97.04. Ultimately, you come back down to the 50 EMA. Retest there would be 89.14, which gives confluence to the 200 SMA there. So definitely keep a close eye because NVIDIA is picking up on some levels to the downside. We'll be going over the 4-hour here real quick because this is extended trading hours. There is a bullish bat swan pattern that is around XA at 101.04 with a potential death cross here off of the SMAs here. If you start looking to lose that 101.04 level where XA is at, then you're looking for a type return to hop there at 92.34. So 97, watch out for 97, and then hop at 92.34. The HSI is flatlining here, so kind of important level to watch out for here on that 100 psychological level. Ultimately losing that, then you go look for targets to the downside. If you hold above XA and you get a reversal candle, you'd be looking to retrace back up to 112 and then fill the gap there around 117, and then for the full completion of type 1 reaction target 2 at 119, 120. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin here. So Bitcoin on the daily, we currently, this is Sunday, 54,800. You did go below on this during the weekend here around 52.5k. You do have a potential death cross approaching on the daily chart here. Volume to the upside has been very weak, very low volume. So ultimately right now I do think Bitcoin does look bearish. Crypto market does look a bit bearish here. We're going to the 3-day chart to look at the dragon pattern that has been forming here, where you're currently holding just slightly above CD there at the 1.272 of this dragon pattern at 52,300 and change. Below this level, then you have the 200 EMA there at 47.8, the 200 SMA there at 42, and ultimately you would come for a type 1 reaction to PT1 there at 38.5k. The HSI got plenty of room to the downside. My opinion right now, you did also get the 2050 crossover to the downside, so it doesn't look good for crypto right now in my opinion. Specifically Bitcoin right now, you could see a retest of that 200, maybe even all the way down to 42k as a next target. If we go over to the weekly, you are holding on to the 50 EMA level there, 50 SMA support, which is around 54k. Below that, then you do have some room to fall down to the 200 SMA at 39 to 36k, which gives confluence to the PT1 target at 38k. So right now Bitcoin does not look good here. The volume to the upside, anytime it's trying to go push up, it's been on weak volume. So definitely keep a close eye on Bitcoin. Alright guys, so that's it for me. So I will be streaming same time as always. I do stream from Monday to Friday from market open to market close. So if you're interested in watching me stream live, link to my Twitch in the description box below. Having said that, I hope you have a good rest of your Sunday, and I will see you guys bright and early tomorrow. Take care everybody, and peace.